favorite friends? It's your girl Cha Cha reporting live from the Money Mantra, and we are back with another Forex education video. I created this channel to help as many people as possible become independent and profitable traders. So if that's something that you've been looking to do, welcome to my channel. Now, if you are a new or returning subscriber, make sure that you do take some time to check out some of the playlists that I have because they do cover a lot of issues that traders tend to struggle with, like understanding entry points, understanding candlesticks, and just finding a solid strategy. So I have a little bit of everything here. So definitely encourage you guys to get nosy. Now, if you're interested in more help beyond what is offered on YouTube, you can register for my personal mentorship program, and all of that information is down below in my description box. So in today's quick video, we're going to be continuing our journey through the Candlestick Trading Bible, which to me is one of the greatest resources if you want to be a successful trader, just because it breaks down how to understand market structure in a pretty simple way. Market structure is a simple concept in itself, but if you're new, everything can seem so vast. So I like the fact that the book breaks it down into bite-sized pieces and gives us examples that we can understand. Now, if you're completely new to trading, what you do need to understand is that these things that you see on the chart are called candlesticks. If you see one green candle or a series of green candles like this, it usually means that the market is in an uptrend and pushing up. If you see one red candle or a series of red candles like this, it usually means that the market is going to be pushing down. Now, your job as a trader is not to predict the market, but it is to find the best entry points for yourself and to be consistently profitable. Now, one cool thing about candlesticks is that if you understand the patterns that are forming, you don't need to understand all of them, but if you have one or two good ones that you can understand, I definitely think that you will find yourself being a more profitable trader. So today we're going to be talking about the Harami candles, both the bullish Harami and the bearish Harami, because they're pretty easy to identify. And once you get the hang of it, it's something I want you to look out for in your charts and see if it'll help you with your trading. Now, Harami means pregnant in Japanese. And the reason why they chose this name for the candle is because if we're looking at a bullish Harami, this is typically going to be found at the bottom of a selling trend, right? So you'll notice that there's been a lot of selling. You'll notice a huge red candle, which will end that selling trend. And then you'll see a smaller green candle that opens and closes within the red candle. This just means that the body of the green candle should fit completely within the body of the red candle, hence why it's called Harami. When you see this, usually the market is going to be pushing up because it's the start of a buying trend. Now, the opposite of a bullish Harami is going to be a bearish Harami, and this will usually be found at the top of a buying trend. So you'll see a bunch of green candles, then you'll see a large green candle. Next to the green candle, you'll see a red candle that opens and closes completely within that green candle, causing another Harami pattern. After that, the market should push down and it should sell. So it may be a little loud, guys, if you hear some music in the background, somebody's driving by. But the Harami candle is pretty easy to recognize. You won't find it all the time, but when you do see it, it is a great opportunity to get into the trade. Now let's go ahead and look at another example of a bullish and a bearish Harami, and we'll start with the bearish Harami first. So let's just say you came into the market at this point in time, and we could tell that the market may be setting up for a sell because we see the wick on the candle. Now, this is something I want you to back test and practice on your own, but whenever you start to see wicks form at the top of a trend, it's usually a sign of reversal. And whenever you start to see wicks form at the bottom of a trend or a candle, it's also usually a sign for reversal in the opposite direction. Now, let's go to the next candle. Now, we can see so far that this red candle fits completely within this green candle, making it a bearish Harami. Now, what we would want to see next is on the third candle, which will be your entry candle, it should open lower than this candle and then continue to push down. When it comes to setting your take profits and stop losses, for a bearish Harami, you want to set it above the high, right? Because it shouldn't get higher than that if it's a downtrend. And you want to set your take profit at a previous low. So let's just go ahead and hit play and see what happens here. We can see that candle definitely opened lower than the next candle, and our bearish Harami pattern was complete. I love it. I love it, love it, love it. Now, I also like this because we also have a bullish Harami pattern that has formed at the bottom. Now, remember, bullish Harami is when the green candle fits completely within the red candle after a selling trend. And this time, we're going to do the opposite. We're going to set our stop loss below the low, and we're going to set our take profit at a previous high. And let's just go ahead and hit play and see what happens. Now, the cool thing that I love about candlestick patterns is that you can use them independently. As we can see, it's worked here 4 times, but it is nice to use it in conjunction with your other indicators. So for example, if I decided to turn on my stochastic, and let's just turn off the EMAs for a second. If I decided to turn on my stochastic, I can also see at the time that my bullish Harami was forming, my stochastic had also crossed above 20, which for me is a bullish confirmation. And on my bearish Harami, I can see that my stochastic also was facing down, and my orange line was above my blue line, which of course for me is a bearish confirmation. So these candle patterns are pretty simple to identify. Again, you won't find them all the time, but when you do, you really should take advantage of them. Here's another great example of a bullish Harami. We see that the market was having a small sell for about 3 hours. We see that the green candle was completely inside of the red candle, and then the market pushed up. So it played out beautifully. But that's really all I have for you guys today. I hope that this was helpful. If you guys have any questions, go ahead and leave them down below in the comment box. But if it all made sense, let's go ahead and drop some of my favorite number 7s in the chat to let me know that you got it. But that's really all I have for you guys today. If you have any suggestions on the type of videos you'd like to see or other candle patterns you'd like me to review, just go ahead and let me know below. But I'll see you guys next time.